Hey everyone, this is Nick and Ron with another coronavirus edition of Ask Ron. How you doing today, Ron?
I'm good, man. Sitting here working like a dog.
Yeah, me too. All right. Well, we got some questions here for you. Looks like about a few questions. Got maybe 5, 6 questions.
Okay.
First question is from Harry in Texas. On a recent appointment, the seller agreed to a $600,000 sales price with nothing down. When he asked about where his security was, I explained that although I am putting nothing down, the people I put in the house will pay me a large enough down payment as I can get from them, and they will have skin in the game. Immediately, I saw his greed glands swell and his pantyhose pucker up, and he said, "How much of that are you going to pay me? Why shouldn't I?" What could I have said to make this agreeable and make sense to him?
It's not what you could have said. It's what you could have not said because you talked too much and you started teaching, and now you see why you don't want to do that anymore, right? Hey, you don't tell people what you're going to do with the house. I would have just simply said, listen, I didn't come here to buy your house and not intend to pay for it. I mean, do you have any reason to believe that I'm not going to pay for it? And then let them answer that question. That probably would have been over with. But instead, you talk. And I warn people against that all of the time, talk themselves right out of deals. You figured that one out, didn't you? Shut up. Okay.
All right. Next question is from Dan in Ohio. I was wondering if I did a lease option with the seller, do I have to give the seller an option deposit?
No. I don't remember ever giving the seller an option deposit when I do a lease option with them. In fact, if you look on my agreement, there's no place to even put a deposit. One with the seller.
Okay. Second part of Dan's question, when doing a wraparound mortgage in the name of the land trust, do you have to have the funds available in the land trust or IRA in the amount of the loan balance to use this technique?
I'm not sure that I got that question, but I can tell you there is no land trust till the day you take title, so there can't be any money in it. There's no bank account for a land trust, so it has nothing to do with the money. It's just an instrument to take title to the property. And no, you don't have to have a dime in the property. I mean, in the bank. When you buy with a wraparound mortgage, it's simply that your attorney creates a mortgage to wrap around their underlying debt. And in Ohio, that's quite frequently going to be a land contract anyway. So you're just complicating the heck out of it. It's not that complicated. It's one document. Your trustee signs as trustee back to the seller. Or if it's a land contract, I would like to see an LLC signing it and you sign it as manager. Nobody's going to check your credit. Did that answer that question, Nick, or did I answer?
Yeah, I think so. I think the main question was, regardless of the instrument that it's taken in, if you have to have the funds available.
Absolutely not.
Okay, so next question, and I hope I'm pronouncing this name right, from Evgenii in California. In which situation and at what point would I need to use an escrow company or service?
Anytime you close a real estate transaction in California, an escrow company is probably going to be the one closing it. I always like for an attorney to be part of the closing. Much of the time, they actually work for the escrow company. But what we use as title companies, you're going to be using as escrow companies. And also check your title and issue title policy when needed. We don't really use title policies in the pretty house business, but we certainly use them when we're paying cash for properties. When we're at risk, we buy title insurance. When we're not, we don't.
Okay. I just want to, he had more to his question here, but in California, like you said, the classic real estate transactions were done with an escrow company, not attorneys. I'd assume when buyer insists on some money down, this goes to escrow. Is that right?
It goes into the escrow company's account and then they immediately distribute it to wherever it's supposed to go, as any other closing of any kind, anywhere in America. Yes.
Okay. How about lease option funds? Do those go into any escrow?
Most of the escrow companies won't even put them in their escrow account. They'll have the tenant buyer make the check out directly to you.
Okay. All right. Next question is from Ellis in Pennsylvania. 2 questions here. Can you do some kind of owner financing as well as take a bank loan? something like an 80-20?
Used to be able to do that. I think what you're asking is for the seller to subordinate part of the purchase price. We did a lot of that back prior to '08, but banks just don't want to do it now. They want to see you have the skin in the game. However, if you're asking me that question, you probably should change your focus to come get trained at my Quick Start Real Estate School, where I'll teach you the worst mistake you can make is to go to the bank and get a loan, regardless of down payment or none. We don't go to banks to get money. We don't guarantee debt ever for any reason that has to do with real estate. We learn how to buy real estate without guaranteeing the debt, stay out of trouble, and also reduce your risk to practically nothing. I'm adamant about teaching people to reduce your risk. Quit taking all those big risks. When you guarantee debt, you're risking your credit, your assets, and your marriage. For what? To buy a house? No, we don't do that.
And the second question from Ellis is, can we take title to a foreclosure subject to if we bring the loan current?
Yes. Sure, most people do, actually.
All right. Next question is from Yong in New York. Hi, Ron. Seems like you prefer using seller financing for terms deals and private loans for all cash residential and commercial deals. Under what circumstances, though, would you recommend to use other types of financing, such as hard money loans, HELOC, etc.? Or are those forbidden under Planet Ron?
All right. I don't use hard money loans at all. That's money that comes from loan sharks at very high cost with stringent rules. Back in the day, I did some of that. That's where I learned not to do it. If you need capital, you raise it from an individual that's not in the business of making these kind of loans, and let them know what it's all about. And we got all the tools for you to do that. Even got a CD you can hand them. I tell them what it's all about for you, then you just contact them back. It's right on your Gold Club site. In fact, there's even a website there for private lenders that tells them to fill out this form, and it tells them why they should fill out the form, and it makes a case for them to do private lending. In a case of buying properties all cash, yes. Today I just write a check, but most of the time in my previous life, we'd use private lenders, correct. I've done hundreds of them with private lenders. Now, in the case of terms deals, you're right. I do prefer a wraparound mortgage or just a first mortgage back to the seller if it's free and clear. I haven't done a lease option in quite a while because I want the deed. I want to own the property for several reasons. Number one, I have total control. Whether I owe the seller or not, the day I get that deed, I don't have to ask the seller's permission to do anything. I own the house. Number two, I get depreciation. And people sell that short. That depreciation keeps you from paying income taxes, or at the very least reduces it. Plus I get appreciation. And then I get that one of the big ones that everybody forgets is the debt pay down. Every month that goes by, I get richer because of the debt pay down, and hopefully the value is going up. And plus now the monthly cash flow. So look at all these advantages come when you don't sell the house, which none of them you get when you do sell the house. So that's why I'm so adamant about the terms business. It's not just getting that check up front. It's getting residual income that'll put you out of work, but also building wealth at the same time. You just don't get that wholesaling and rehabbing. And I don't want to poo-poo wholesaling and rehabbing because they're all part of the business. It's just that I hate to see people make a business out of wholesaling because they miss all those great benefits just to get a small check. And then they got to pay short-term capital gains just on that check. And it's the same with rehabbing. Rehabbing is a great business or part of a business, but I just don't want it to be your whole business. I don't mind anybody rehabbing 2 or 3 houses a year or more if you want, but you should be in the terms business generating tremendous wealth while you're doing those rehabs. People who, by and large, do nothing but rehabs are very unhappy people. I'm going to catch hell for that one, aren't I, Nick? Because that's where all the grief is, rehabbing houses. All right.
Last question we got is from Brent in Indiana. And he says, I'm just getting started. Why would I ever want to lease option from a seller instead of owner finance?
Man, I don't know. I'm with you, but there are reasons. Number one, Let's say you live in a state with very high closing costs, like Maryland. I mean, there's a whole ton of them. There's a bunch of them that have very high closing costs. I mean, in multiple thousands of dollars. Like in Maryland, just the transfer tax is 3% in some counties and 2% in the others. So, okay, you're buying a $500,000 house, you got $15,000 just in transfer tax alone, attorney's fees and the other costs. If the conditions warrant, I might, and if I don't have enough equity, I might consider lease purchasing it from the seller. I still get the same back end benefits. I just don't own the house, but there's no closing costs. So I eliminate the closing costs by lease optioning it. Now, if there's a bunch of equity in it, I want to own it. I'm still going to pay the closing costs just so that I can own it. And don't forget the depreciation. On a higher end house like that, the depreciation will very quickly recapture all the closing costs you spent to buy the property by taxes that you don't have to send to the IRS. It doesn't take 1, maybe 2 years, and you'd be likely to break even on that. And then you got all that long-term benefits going forward. And then sometimes you do a lease purchase because the seller simply won't deed you the property until the loan is paid off. In that case, do a lease purchase, and then they still retain title to it. Or sometimes they are concerned about the due on sale clause. So if that's the case, you can propose a lease purchase because the bank can't call a loan due if the title isn't transferred. And when you're doing a sandwich lease, the title isn't transferred until your tenant buyer goes out and gets a loan, whatever time in the future they do that. So there are reasons to do it, but most of the time I'm going to get the deed and not do a lease.
Okay. That's all the questions we got.
All right. Guys, if you're watching this, when will they be watching this? Tomorrow? Okay.
Yeah, Friday. They're watching it. It's today to them. So.
Okay. Look how current we are. We're recording it the same day you're watching it. And the reason I ask is because we got Ted Thomas event coming up here at the end of the month. I hope you're aware of it because it's a 3-day free event on tax liens and tax deed certificates. And this guy is the best in the country at this, I can tell you right now. He's going to open your eyes to a whole new way to make money without leaving your desk. You're going to be shocked what you learn during that 3 days because most people don't even know it exists. It's free. So you got a link on here that can get on it, Nick?
Yeah, we're posting it right below the video.
Okay, you better hurry because we can only hold 1,000 people and we're getting close to that. So this is getting very popular. So I'll see you next week. Go out and see if you can't get something accomplished by then.
All right, we do have a couple of other announcements real quick, Ron.
All right, shoot.
We normally have a quick start alumni call on Monday, but that's Memorial Day. So we're not doing that, but instead we're actually going to be doing a live 2-hour Q&A session with you on June 4th.
We are?
That's it. Yep, that's it.
We are. All right.
Yeah, that's June 4th. It's from 10 to 12.
All right. Eastern now, Eastern.
Yeah, Eastern time. We'll post a link for that.
Okay.
Register for that as well.
So that's just, they submit questions and I answer them.
Yep, and they can also, we'll actually have instructions. You can submit video questions and we'll post those videos.
Oh, yeah.
And Ron will answer those live. So
We'd like to see you do that, guys. Just do a video and we'll put you right up here on the screen and show everybody how pretty you are. You can submit them by email, but hey, let's do the video. Let's do like they do on television. You know, are you watching Ellis sketch? Let's do what like they're doing right now. Have everybody on the screen. So,
yeah.
fun.
And then the last thing is we're going to be doing a 4-hour-ish terms training on how to do terms during COVID, or basically doing it virtually, even when COVID's not around. How to do it.
Okay, and when is that?
That is June 11th from 12 to 4 Eastern time.
12 to 4. Yeah, you're breaking up a little bit. So that's
sorry.
12 to 4 Eastern Standard Time because we have mercy on you West Coast folks. Why? But staff says, come on, let them sleep. So, all right, we're letting you sleep. 12 to 4 on the 11th. That's free. Free.
We'll post all those links down below this video so you can get signed up for TEDS next week, the alumni the week after, and then the terms training the week after that. So we got lots of training lined up for you.
One word of caution though, Nick, we might be going from 12 to 5 because we've been discussing having some deals come through and let me process them and have our mentor call. I can only handle about 5 deals in that extra hour, so it's going to be the first 5 we get. But I'd count on 12 to 5.
Okay.
Yeah, 12 to 5.
All right.
Okay.
Sounds good.
All right.
We'll see everybody next week.
Bye, y'all.